Hi, good morning. I'm Steve Lovasz, Senior Director, Elavon Partner Management. Welcome to our session, Growing with the Accelerated Pace of Payments Technology, Real-World Strategies for Success. Joining us today are thought leaders that have navigated the payments industry who continue to bring new solutions to market that continue to gain momentum despite some of the challenges that the pandemic has brought upon us. We have here Nicolas Beique, CEO and founder of Helcim. Thank you, Nick, for joining us today.
Thanks for having me.
We also have Tarique Al-Ansari, CEO and co-founder of Paystone. Welcome, Tarique.
Hi, Steve. Great to be here with everyone.
And Carolyn Anderson, Senior Vice President of Digital Distribution with Elavon, whose focus is on digitally driven merchant acquisition and retention strategies. Thank you again for joining our panel today, Carolyn.
Thanks for having me.
So to kick off our discussion today, I'd like to state the obvious, that the pace of change in the payments industry is accelerating at an exponential rate. Compounded with economic challenges and digital adoption brought on in the past 2 years, traditional players and emerging disruptors alike need to develop strategies for success in an increasingly competitive marketplace and a changing business landscape. So indeed, payment challenges are widespread, but so is opportunity. Nick, I'm going to put this first question here on you. Can you tell us a little bit about what concepts are top of mind when Helcim views the current payments landscape in Canada?
Yeah, thanks, Steve. I think that you have to really kind of zoom out and look at from the experience of the merchant, whatever size, whatever category, whatever industry that you're servicing. Yes, the payment space is absolutely huge. It's a huge total addressable market, but you really have to compare yourself to the big entrants in terms of the Stripes, the Squares, the Addians, the Go Cardless, and really ask every processor, every acquirer, every reseller should really ask themselves, how does our service compare to the quality of service that they're providing? And I think that's a really big question that everybody needs to ask themselves. That's really, it involves making sure you have the technology or the service or the marketing or whatever you need to be able to compete. But that's where the market is going, and it's accelerating every day.
And just in that same thought then, Nick, what changes do you see in the industry with respect to technology innovation supporting the growing need for multi-channel payments?
I think what the big change that happened that accelerated in the past 2 years is really around Omnicommerce. I know Omnicommerce is not a super exciting word, but it's a really important one. You really have to ask yourself, what is in-person payments? What is e-commerce payments in today's world? Even kind of zooming back out, what is e-commerce to, you can think about a direct-to-consumer brands, but what does it mean for a dentist or a wholesaler or an enterprise client? E-commerce means different things to different types of businesses out there, and you have to have the technology stack and the ability to deliver to meet their needs in that omni space, whatever that means to them.
Right. And so Tarique, moving over to you, kind of how Nick put it here, payment technology obviously is rapidly evolving. We look at concepts like Omnicommerce and having to adapt to it. But so are the companies that are growing with it. And so from the perspective of businesses that provide a payment solution in market, we see that those companies are either adapting or developing more attractive solutions to their core strategy. So I'd like to talk about the importance that the business model plays when trying to keep up with the pace of change. From your perspective, Tarique, are there advantages or disadvantages that you can point to when comparing existing businesses whose models are to adapt technology compared to some of the emerging players that are developing their infrastructure from the ground up based on the current needs of the market today?
Yeah, great question, Steve. Before we get into the answer for this question, we need to look at a trend that is happening that does not apply to Canada only, just, it's happening on the landscape everywhere. You're seeing that almost every software company that provides software to businesses is becoming, in a way, a payment company as well. So every payment company in the ecosystem, or every payment player in the market, is actually paying attention to that. And when you're paying attention to that, you start thinking like, what's my differentiator? And you mentioned the word solutions. It's start to think about the businesses that you're serving, and what is the value proposition that you're delivering, because every software company out there is eventually going to become a payment company, or is going to embed payments, with their offering. So how do you stand out? How do you differentiate? How do you innovate? And the focus becomes, it actually adds more pressure, in my view, on every payment company out there to differentiate, to innovate, and to deliver a value add. And that is through the solution. And like Nick mentioned, is you have to think of your target market and how is the payment experience, and how can I differentiate, and how can I innovate. From our perspective, we look at the market as rapidly digitizing, and with more businesses requiring digital tools embedded with payments, we want to focus on delivering the digital tools, the productivity tools that can help businesses grow, and embed these with payments. And that is the view and the path that we took at Paystone.
And so, in playing on that, Tarique, when we think about having to adapt to those, the new payment technologies that are coming out, right? So if you look at the businesses continuing to shift from these traditional payment transactions, call it on a standalone point of sale device, to, again, going back to this concept of Omnicommerce, that type of shopping experience where I might take out my phone while actually standing inside of the store, in comparing my e-com experience with my brick and mortar experience, right? What role does an M&A strategy, when we think about the businesses here, as a business within this industry, what role does an M&A strategy play when taking into consideration the pace of technology evolution, and how important it is to the business model, when looking at what is out there in terms of companies that would be relevant to the acquisition?
So when you're looking at M&A, you're actually looking at companies doing M&A and getting two things out of it, or sometimes both. You're either expanding market share, or you're actually adding product benefit. And to address your question, I think you're specifically asking about adding product benefit. So if you're trying to innovate in the payment world, and you would like to have first mover advantage in the market, you're not going to be able to build everything in time to get it to market, to be able to compete with the big guys that Nick mentioned. For that, it's actually really important to look at M&A as a way to fuel your growth and enhance your product roadmap, so that you can deliver these value-added services or solutions embedded with payments to the market, so that your businesses receive that benefit. So in our view, in the M&A that we've done, and we've done like 6 acquisitions in the last almost 18 months, they were all focused on expanding market share, but also adding product benefit. And the product benefit is all towards the productivity tools that we believe the market needs. And that's it from our perspective. And I really believe M&A plays a significant role. And we see a lot more companies, even Stripe right now, doing M&A than buying TaxJar and others. So it's very important.
That's right. And Carolyn, continuing on the topic of the relevance of the business model, can you provide some insight on the adoption of digital technology within businesses and how that's evolved?
Sure. If we look at what's really driving the change, it's consumers, right? They want to use technology in every aspect of their lives, and paying for goods and services is no different. In Canada especially, we're early adopters of technology. So we see that among consumers, and we're definitely seeing that among merchants today as well. So what we're seeing is more and more small businesses are using software to run their business. They're using accounting. They're using software for day-to-day operations, inventory management, scheduling, and a host of other functions. And if you contrast that to many years ago, the payment terminal might have been the only piece of technology in their place of business. If we're looking at small and medium businesses, that might have been the only technology. But now these merchants are using technology to run their businesses. And so they have much higher levels of knowledge and experience when it comes to using technical tools. And what that means is that their expectations for payment providers have become much higher. So the expectations kind of showing in 2 areas. So first is the expectation that that they have the solutions that they need. I mean, Nick talked about Omnicommerce. Tarique talked about evolution. There's people or software companies getting into payments. it's really driving merchant demand for more technology. So they want the ability to operate in omnicommerce. They understand that their customers are looking for a different experience when they pay for goods and services. So what this means is that the list of wants and needs for selecting a payment provider has gotten much longer than it was in the past. The other area that these expectations are reflected in is their interaction with the payment provider themselves. So they expect it to be that interaction to be in a digital format, right? They don't want to just call you anymore, right? They're using websites to do searches. They expect to engage with you in a digital manner, be able to sign up for an account online. So, they really want that opportunity to communicate using digital tools. And they want to receive immediate responses. That's a big change with the digital environment we live in today, is that the expectation for timeliness it's really just accelerated. And people expect much faster responses than they had in the past.
That's right. So convenience, speed, again, recreating that seamless, not only shopping experience, but just in the way that we're doing business here. And of
Absolutely.
course, that really brings up a great point. So, Tarique and Nick, I mean, going back to you both, you've achieved tremendous success, but along two very different paths, right? You might have started off the same, but you've gone down two different, very, very different paths. Can you share, what you think are critical for payments companies when planning for sustainable growth? We talk about, we've been talking about solutions. We've been talking about characteristics of these solutions, keeping up with technology and the needs of consumers, not only for the merchants, right? So can you talk a little bit about, and Tarique, I'll start with you, what did you find was critical in terms of building out your business and what you believe to be, leading to success as you look at, other things like value-added service in your business model?
So it's interesting, Steve. I remember when we started with Elavon here back in 2008, 2009, it was innovative enough that we're going to a merchant and being able to provide them one payment device that can accept all their card types, Visa, MasterCard, Interac, and you can add Amex. That was like, at the time, great, innovative, because, yes, merchants used to accept multiple different devices, multiple different bank statements, and multiple different deposits, and 800 numbers to call. You're able to just come and give them that. Now that becomes, in this day and age, we went from merchants looking to accept payments to merchants demanding omni-channel payments. Doesn't matter how I accept it. I want it all to work. I want it seamless. I want the same experience. To actually now merchants are expecting payments to be embedded in whatever solution that they're using. They're actually start their business, when businesses used to start back in the day, they used to look for credit card acceptance. Now, when they start their business, they look for software tools, for the productivity tools that can help them run their business. And then they expect that to either integrate with payments or even have payment embedded in it. I really believe in the day and age that we live in right now, the value is going to be more the solution that payment is integrated to or embedded within than the actual payment acceptance itself, because it just becomes table stake right now. What differentiates one payment provider from the other, and other than making it a commodity and it just becomes a competition on cost? It's the solutions and it's the value add that you're delivering with payments that can actually help that merchant or that business get an added benefit from it, whether that is growth, whether, like, in our case, productivity, or a lot of other players that are focused on the back office, the POS and other aspect of the merchant life cycle. So love to hear Nick's thoughts on that.
Yeah, I think the way we look at the world at Helcim is that, back to what you said, Tarique, you have kind of software coming in and trying to eat payments, and then you have payments coming in and trying to eat software. And no matter what you're trying to do, you have to excel at it, both in the way you deliver your software and the way that you deliver your payments. And for us, we really looked at going back to the players I mentioned earlier in the call, the Stripes, the Adyen, the Squares. They have set a very high bar in the market in terms of how they deliver that experience, right? Especially when it comes from the digital aspect of that kind of instant onboarding and so on. And we wanted to be able to bring that to the market at a really high bar, and then find our specialty and differentiation in the market to be able to compete further. But I very much believe, maybe a bit of a spin on what Tarique said is that I still think that a ton of merchant relationships start at the payment, not always at the software. I do think that solving the payment problem still remains a huge part and a very early part of how a business thinks about solving their solutions, right? And it's about being able to bring a really high level of quality of service and a quality of payment experience really early, and then be able to keep that relationship into your kind of software ecosystem, as opposed to them going to look for a software provider that happens to have payments built in, right? So that's crucial for companies to be able to kind of deliver on that.
And I mean, very good points, right? And I like to always bring up the analogy of the cell phone. We look at some of the terminals today, they've become smart. We look at our phones, we look at our TVs, those have also become smart. And when you pick up a phone, the first thought is you got to dial a number. But today, that becomes our internet browser, it becomes our shopping experience, it becomes our digital wallet. So there's a lot more to it. But what brings us to that first is the capability of it being a phone. Similar to what you're saying, Nick, is that we are also starting that experience off with the payment conversation. But going to Tarique's point, there's a lot of value add that now becomes the sticky points for that phone. And again, I'd like to hear your thoughts on this, Nick. When we think about gaps in the market, especially for where Helcim's journey has led to, were there any major gaps that you found that someone like a payment facilitator was able to fill that a current, let's call it a standard MSP in the market, was not able to?
Yeah, I think it's almost like looking at the waterline of the market in terms of like how that experience is delivered. And once a certain the waterline has been set, kind of no going back, right? So for us, our decision behind going as a payment facilitator is we really looked at, okay, what is available in the market now for an average SMB, right? And it's like you can sign up for a payment service A to Z, in under 5 minutes with no paperwork. And when I mean paperwork, we're very much believers that like even electronic signatures are still seen by merchants as paperwork. Like it really has to be Apple style, click to agree, iTunes, and that's where we saw the watermark. And ultimately, in order for us to kind of deliver that instant experience, both for the kind of onboarding and ongoing servicing, we knew we had to become a payment facilitator to deliver that. And that because it required us to build our technology stack and our experience, from right from the beginning, and then be able to deliver it A to Z. And that's what led us down that journey.
Again, there's this need for making it easier to do business. It's almost like that initial conversation, right? There was that gap in the market that, again, going down this path of payment facilitator was able to help solve for. And Tarique, going back to, I'm trying to think here, from a sustainable growth perspective, you talked about the importance of value-added services, gift and loyalty, right? In terms of, keeping that sort of top of mind here when we think about value-added services and the transaction, right? We're starting to form a better picture of, who is that person that is running that transaction? Who is running that shopping experience? And is there information there that becomes valuable? Is there anything that you can talk about from a value-added services perspective about maybe tying some of that information back to the transaction that essentially not only helps the merchant business, but again, keeping that consumer to merchant relationship a little bit stickier?
Yeah, absolutely. And I'm going to use your smartphone analogy. We went from the basic flip phones to the smartphones. I'm very opinionated on this. And I believe what made Apple and Google stand out with Android and the iPhone is not that they just made a smartphone, because there was a lot of smartphones and some of them actually failed. And we know of a big one here in Canada. What actually made iPhone and what made Android is the ecosystem that they built, which is the value add that they delivered with the smartphone, that being through the Apple App Store and the Google Play Store. So that's what created the sticky factor. Now, I do agree with Nick that a lot of relationships right now start at the payment still. And to your point, Nick, you must deliver that sticky factor with the payment, because it's going to get to a point where, you know, us offering payments, and not just us. By the way, I admire what Helcim is doing. I'm very close with Nick, and I know, you know, how far ahead they are on that front. And I'd love to believe we at Paystone as well. But for any player out there, I'm sure everybody's top of mind is, what's that sticky factor? What's that value proposition? How do I differentiate? Offering faster payment, you know, seamless experience, all of that, I think that is going to be the thing that everybody's going to offer. That's not going to be what's going to differentiate us. What's going to differentiate us is really that solution, that you know, extra added layer of value of software that you add to the payment that can go with it. And that actually enhances the payment experience. It has to tie to the payment experience, but it has to actually deliver value to that business and their customer. And that, in my view, is going to be the billion-dollar challenge. And I know investors right now are super excited about, you know, the payment space and what's happening in the payment space. But the winners are going to be the ones that are going to build value add beyond payments with the payment being integrated.
All right. Well, again, very good insight, right? We see this, we see solutions coming from different, let's call it strategies, and obviously born out of, you know, what the consumer's needs are. You know, we're starting to see that this ecosystem really is, you know, a feedback loop where not only are we being challenged by consumers, we're also being challenged by some of the limitations of the technology itself. As we start to see that, you know, the challenges, especially coming out of, let's call it the pandemic, and just, you know, I'm sure we're all sick of talking about the pandemic, but, you know, when we look at what we've seen across most markets over the course of the last couple of years, you know, what key factors would you say helped companies pivot to minimize some of the business disruptions, you know, especially considering here what we're seeing are all these factors of growth, of sustainable growth, right? And Nick, I'll start with you, because, you know, you certainly talked about the ease of business, right? The use of technology, and, you know, combining those two, you know, how can you formulate, let's say, a strategy that pivots a business in order for them to be able to, you know, weather the storm of the pandemic, or anything that might be upcoming as well?
Yeah, so I mean, going back to kind of my earlier points, it's really about omnicommerce in a sense that to this day, I think that there's a lot of payments companies out there that still kind of very much segregate and separate the way they deliver their online solutions versus they do their in-person solutions, right? Even going back on companies like Square and things like that, even through the onboarding process, they'll ask their customers, hey, are you an in-person customer? Are you an online customer? And that needs to go away. And, you know, that's something that we're able to deliver, you know, without that differentiation, where when a small business customer signs up with us, they are just a merchant. We don't put a label on them in terms of how we're going to deliver that service. And then based on what tools they're using, both in terms of software and payment solutions, they kind of determine their own path themselves. And I think that once again, back to that waterline, that's kind of been the line that's been set with a pandemic is any merchant that was experiencing a payment experience with, like, you know, a machine at the front desk that didn't do any kind of online or any kind of, you know, digital experience, you know, they quickly realized this no longer worked for them. And I don't think they're going back. So I think that most payment companies really need to look at how the way they're delivering that service. And if they are creating that differentiator, that segregation, the way they deliver their service, they should really look at removing those barriers and delivering the way that merchants want. You know, one transaction's in person, one of them is an invoice, one of them is online. It doesn't matter. They're just transactions, and merchants don't want to be put into those boxes anymore.
And Nick, I'm going to go back to you a little bit about, let's call it barriers of entry here. But Carolyn, you know, I'm also interested to hear your perspective here, because within, let's say, the operations of a business, right? What focal points exist when you think about minimizing disruption?
If I talk about disruption in the context of the pandemic, as you put it before, you know, what we really see is what happened is that there's an acceleration of the path that we're already on. People talk about businesses pivoting, changing the way they were doing business, but they were already headed that way, and they just had to get there faster all of a sudden because consumers were purchasing in different ways. So for us, for us dealing with merchants, helping them to get onboarded, we already had a process in place where merchants could work with our sellers and work together to sign up for an account. And we very quickly had to accelerate our DIY strategy, that do-it-yourself process, letting merchants go through that process end to end, let them research what they want from a payment solution, engage with us digitally, go through, get that approval, email in their inbox, receive their solution, and get going, all on their own and on their own time, right? It had to be really easy, especially through the period we just went through. They had enough to deal with their business operations to change. They didn't want to have to spend a lot of time, engaging with a payment provider and then getting their solution to work at the end. So it was really about accelerating that strategy, making it really easy for merchants to sign up with us, and then really easy for them to use the solutions that they had chosen.
That's right. And, when I think about this, and Tarique, I'll point this in your direction, when we think about some of these, let's call it gaps in the market, the experience that we have here in Canada, right? And you think about, we can go to underwriting. We have, of course, certain KYC policies, of course, with the banks. When we think about that experience in Canada, how do you see this, from a global perspective? Now, how do you see this different in other markets, right? And possibly even other vertical or other industries that aren't necessarily, payments focused industries? Would you be able to speak about just some of the differences there when it comes to the barriers of entry?
Yeah, great question, Steve. The rest of the world is, or the difference between developed nations and the rest of the world is actually really interesting. We've seen this in the cell phone world, where so many countries and nations just skipped the landline. They just went straight to cell phone. And I think from a KYC perspective, from a regulation perspective, we're actually seeing this in payments as well, in a lot of developing countries where your KYC just happens with your mobile operator, and you start accepting payments and have a wallet and you're up and running, and the underwriting is just done instantly with a text message. Where here we're still required to do full underwriting, get driver's license, home address, and a few other things. What, like Carolyn mentioned, what the pandemic had done is really fast track. Like what we were hoping to do in the next 10 years happened in 6 weeks. It's like, for us, luckily, I would say, it forced all humanity to just accelerate that digital adoption. It's forced by the customers, which got pushed on the businesses, and then the businesses forced all their providers to actually adapt to that change. From what we're seeing from a barrier of entry in Canada, I think we're making good progress on getting there. And Nick mentioned like the seamless, frictionless onboarding and how to make it like one view. You're just a merchant regardless of how you accept payments and all of this stuff. And we're seeing a lot of players are actually innovating in that space. I think we need to get to a point, and it should not be hard, where once the business is authenticated and that's who they are, you don't need to keep asking them for things after that. And there are companies that are actually, and platforms that are doing this, and we're seeing the adoption of that in other parts of the world, being very successful. And I don't want to advertise for these companies that I've recently come across, but I think that is basically where we're going to see more of the innovation happening in breaking barriers and making it more seamless, is on making the onboarding so frictionless, on making the experience of the merchant being onboarded and being able to be up and running virtually non-existent. Just we know you, we have this piece of authentication through your cell phone number, for example, and that belongs to you, and you can be up and running and start accepting payments. from so yeah, that is my view on this.
And Nick, just speaking about let's call it the ability of a payments company to effectively monetize their services, their product in Canada, through your experience, how have you seen that differ compared to other markets in the world?
Yeah, I mean, I think I have a little bit of a pessimistic view at some of the speed at which Canada has been willing to adapt innovation. I think that for us at Helcim, we're very much a Canadian company. We're proudly headquarters in Calgary, but 75% of our business comes from the U.S. So we've had experience launching as a fintech, as a payments provider in both countries, and the difference has really been kind of night and day. I think that in Canada you have much more complex regulation around and cards and complexity around card schemes like Interact and things like that that really add barriers because the number of key holders, that kind of hold the keys that can allow you to kind of participate in that network is much smaller, and there's a lot more of a vested interest in them kind of preserving their position. So I really think that Canada needs to, and the bodies in that process need to kind of look at themselves in the mirror and go, is this the place we want to be, where we are, while we are one of the most kind of digital countries and kind of one of the greatest, I think one of the greatest countries in the world in terms of the quality of life and the intellectual power of the populace, but when it comes to payments, actually we're quite behind, and I think that's actually been something that's been chosen to try to slow down innovation. So I really think that ultimately, I think that can bite us as a country, because we won't be able to bring the innovation to the consumer and to the small business and to the end user as quickly, and then we can be left behind as an economy if we don't allow for a faster pace of change. So Canada's an interesting market to grow a payments company in, I would say.
Nick, can you also make a comment on the monetization? Because I know for a fact that in the States, it's much different because of the different card schemes. And that is also something that, adds more pressure, or I'd say like more friction for payment providers in Canada when you're accepting card schemes that have different pricing strategy than what's mainstream.
Yeah, I think maybe, thanks for giving me a chance to talk about that. If you look at, the major networks, card networks that are international, like, the big juggernauts, the Visas, the MasterCards, the American Express, right? I think that one thing that's really interesting about their approach is that they actually have still create a pretty level playing field for whether small entrants or large incumbents to be able to operate at a level playing field in terms of how they deliver their services. But when you're talking about like specialized country-based card schemes, especially, I'll point directly to Interact in Canada, that level playing field has not been created. It very much defaults and provides kind of preferential pricing and treatment and access to the large incumbents. And I think that's really slowed down innovation for fintechs and other providers to be able to, because it's such an important card scheme to the market, it's actually really acted as a slowing factor, which I don't think is ultimately in the interest of the end user.
So Nick, that's a very interesting point, and I'm going to put this back to you. So when we look at the consumer experience, oftentimes Canada, will relate itself to, say, the European market. When we think about the different payment technologies that hit the market, something like pay at table, we'll see it adopted in Canada as one of the first places, right, globally to accept and to use the newer technology. So it's an interesting point, right? If you are looking at some of the players, entering the market and playing in this space compared to what the consumers are, willing to do and to use in their hands, that interaction between the friction that you see as a business trying to, again, develop a solution versus those who want to use the solution as consumers. Do you think that let's say the disposition or the difference between how easy it is to essentially play in this space as a developing business versus using the actual product, do you see that there is that interaction that allows for more innovation, or do you think that it would hinder innovation in Canada?
Yeah, I think the way that Canada is positioned right now, it actually hinders innovation. So I think if you look at operating in the European market or operating in the US market or Asian markets, there's actually a much cleaner line to kind of accessing those networks and those banking relationships to be able to make it happen. I think if you look at how much Canada has dragged its feet on the open banking initiatives compared to Europe and the UK that have really kind of embraced it, and you've seen the innovation that's really flourished in the past few years from that. Same thing when it comes to like how much how many feet have been dragged in terms of like bringing real-time rails and other innovation that would really kind of open the door to better products and better financial products and payment products for consumers. I think that Canada is starting to fall more and more behind. See if that changes, but I do think it puts the entire economy in a bad place over time because it just makes us less and less competitive to be able to bring more options to the end consumer.
And do you think that those, let's say, that limitation or that that lack of our pace in terms of adopting or adapting some of those strategies that we see in other markets, is that something you see hindering our ability to scale economy in the next 5-10 years, or are you thinking longer term when you talk about how much time that would take?
Yeah, I think the way to look at it is every year that we drag our feet to bring more of that innovation to the rails and to the kind of backbone of the payment system, the banking systems, is a couple of years lost to down the road in terms of the innovation that people can bring, right? So I really hope that changes, but we'll have to see.
Yeah, it's an interesting perspective and observation. So switching directions a little bit here, when we look at the FI space, right? And I'll put this question out to the group. How is technology, driven bank payment strategy, that you'd be able to comment on? And I know that as your companies have not only interacted with card brands, with consumers and merchants, as well as the banking institutions, right? What are some of those strategic changes that you've seen within the FI world?
Nick, you want to go first?
Sure, I'm happy to go first. I mean, talking directly about FIs, I think we see quite a contrast. So for us, operating in 2 countries, we have relationships with over 8 different kind of FI partners in terms of how we look at our rails and our money transfer services. And those include Elavon and its parent U.S. bank and different banks throughout both countries. And you really see a contrast between where certain FIs are and the way that they deliver their the ability for APIs and kind of open standards and things like that versus others that don't. And I think ultimately that drives fintechs like us to towards certain partnerships versus others, right? But I do think that we still see it going back to Canada versus the US. We still see a contrast between typically our US partners are, even for kind of legacy FIs, they are typically the US partners are much ahead in terms of the level of technology that they can bring to their partners versus Canada is typically quite far back. And we have companies like us have to really kind of put a number of layers on top to try to smooth that out so that the actual experience that we deliver to our end merchant feels just as good as instant, but there's a huge amount of work that goes into kind of trying to polish that back up.
That's right. And
yeah, Steve.
Tarique, yeah, sorry, go ahead.
Yeah, as I actually agree with Nick on this one. The thing is with the States, they're lucky because it's just much bigger market, and definitely it makes the FIs or the service providers business case easier to deploy technology and invest just because it's a much bigger reach. But I actually noticed that businesses in the US are just a lot more aggressive in trying things out. Like from a market penetration and like launching services and products in the US versus in Canada. In Canada, there is still a lot more hesitation maybe of using some of the smaller fintech players or the newer, less established companies, which versus the incumbents. Where I might a little bit differ with Nick on, I think I agree with Nick that Canada is lacking right now, but I would love to say I'm a little bit more optimistic about what's happening now with open banking and NTRAC and Abraham, the new Canadian open banking lead. I feel we are headed in the right direction. And even though, yes, we had a little bit of a slow mover advantage, I'm optimistic about our ability to catch up. And I really believe that there will be more that will come out of card schemes such as NTRAC, which right now actually acts as another added layer for any player that want to come play in the payment space, especially coming from the US or international markets. Now they have to certify to NTRAC, and it's a whole different card scheme that they have to deal with. But with the move with open banking, I would love to say that I'm optimistic, and I would remain so. And I think there will be more to come on that. But definitely the US market on both aspects, on the service providers and the FIs and the merchants and the businesses, it's a lot more easier to do business there, a lot more open, I would say, and maybe even aggressive to just try to adopt new things and give it a try and try new solutions and new products and new services.
It's very, very good insight. And I think the overall message here that I'm hearing is there's tons of opportunity. As a Canadian company or entering the Canadian market, there's tons of opportunity, and we can look elsewhere, such as in the US market, to learn what some of those strides are that are coming, and start to anticipate some of those steps to take, when growing your business or deciding on re-strategizing or recalibrating your strategy. It looks like, guys, we are at time here. So I did want to thank you all, Nick, Tarique, and Carolyn. I really appreciate the time that you spent here for us today. And again, for anybody that is interested, of course, we have our contact information on our events page here, just down below. So again, feel free to, of course, reach out. But of course, I do want to thank you all again very much. Thank you.
Thank you.
Thank you, Steve. And Nick and Carolyn, was great to be with you.